sour trade dispute could put a cork in a bubbly M&A market. Hello and welcome to the Deal Report. I'm Jeff Kanige. China last week threatened to impose punitive import duties on European wines, a move widely seen as retaliation over French support for EU tariffs on Chinese solar panels. The two nations would make an odd set of combatants. Here's why. We start with China's apparently bottomless thirst for French wines. 10 years ago, Bordeaux wineries sold almost nothing in China. Today, according to a French trade group, Chinese imports account for nearly 10% of all Bordeaux sales. Any business showing that sort of growth will always attract acquirers, and this one has. Paul Whitfield, the deal's Paris correspondent, reports that Chinese buyers bought 23 of the 37 Bordeaux wineries sold in 2012. The year before, 21 of 35 vineyards in the same region went to Chinese acquirers. Paul notes that in the past, vineyard deals often involved buyers more interested in the romance of the wine in the glass than in the reliability of numbers in the books. But given the soaring demand in China, the new buyers are looking for good business opportunities, and the nature of the French wine industry makes that a difficult search. French vineyards are largely family-run concerns. They're structured to serve the tax and income needs of their owners, and consequently, the businesses are opaque. Family expenses are run through the vineyard, and revenues are attributed to foreign distributors with profits pushed to low-tax jurisdictions. Valuation is also tricky. Since getting a handle on sales and expenses is so difficult, traditional measures like earnings multiples don't really work. So prices are based on asset values, mainly what the land is worth. And that varies widely, not just from region to region, but also within the regions, depending on how the vineyards are classified. Not surprisingly, negotiations can be complex and lengthy. Suspicious buyers and privacy-seeking sellers often insist on anonymity. Paul writes that many deals begin with talks between an unnamed seller and an unnamed buyer over an unnamed asset. But for the moment, at least, the deals are getting done. Right now, 10 Bordeaux vineyards are being sold to Chinese buyers, which is what makes the possibility of a trade war so strange. If Beijing takes on French wine, the government will be going up against some of its own business people. What had been a robust, full-bodied M&A market could quickly turn and become closed, coarse, and perhaps a bit hollow. In New York, I'm Jeff Kanige for The Deal.